Hello and welcome to today's NinjaTrader ecosystem event, Trade Entry and Exit Confirmation Techniques Using Indexes. My name is Chris and I'm a platform representative at NinjaTrader. Before we start the webinar, I have a few housekeeping notes. Secondly, this webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader Brokerage using the phone number or the email on the screen. Lastly, if you are new to NinjaTrader, please make sure you sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You could create your free account by following the link on the screen and then clicking Get Started under the Welcome section. And before I turn the mic over to Chris, it is important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Also, please remember that these training sessions are not a solicitation nor a recommendation, simply educational in nature. Thanks again for joining us today. And without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Chris.
I want to thank everybody for attending. My name is Chris Knox, and I am the founder of NinjaTrader Pro, which I created for myself back all the way in 2006. We've already gone over the risk. Initially, what I did is I found repeating patterns in price action. And then in 2017, when Ninja opened up the volumetric charts, I created an order flow suite based on patterns there. In 2019, continued to develop the product with some very unique tools that I'm going to talk about, but they involve the cumulative delta divergences, volume analysis showing accumulation distribution, and a special tool that I call Delta Strength. Then in 2020, as basically COVID was starting, I learned how important it was to track and follow the options. And that's basically what we're going to start with right now. But NinjaTrader Pro actually involves 5 different pieces of the toolkit. Looks at price patterns, order flow patterns, real-time divergences. And when I talk about divergences, it's not just prices higher, cumulative delta is lower. No, there's actually 3 different types of divergences. One is accumulation and distribution. Another is what I call special divergence. I'll show you examples of that today, where you have divergences that actually occur from a high to a low and a low to a high. Then there's volume analysis, and finally there is the VIX analysis, which is going to guide us through today's ideas. So what is the VIX? The VIX is the symbol that I'll go into how to use with NinjaTrader Pro. And this is how I've created my system for entering and exiting trades. It's important to understand what it is because it forms the basis of our trade entries. Our trade entries want to be trading in the direction with the options dealers and the VIX trends. The options are important because options dealers need to hedge their trades that they have. And this is why I believe a lot of trading systems fail. They fail because they don't take into account where something called options gamma actually sits at relative to the current price. I'm going to show you how options dealers can accelerate a sell-off and how they can stop a sell-off. And this happened just yesterday, so it doesn't really have to, I don't have to look far for an example. When price is trading in negative gamma, or how they can reduce volatility in positive gamma. So when options are traded, the dealer wants to have no directional bias. And to do this, he needs to hedge the puts and the calls that he's trading with futures, either in the ES or the NQ. And the website that I basically learned all this stuff from that explains it the best is called Spot Gamma. Full disclosure, I'm a paid subscriber to Spot Gamma, and I don't earn any referral fees. But the information about options hedging and the VIX that Spot Gamma distributes led me to do the research using the VIX with ZoneTrader Pro. So what does the book at Vegas and the options dealer have in common? Well, at the sports book, they want an equal amount bet on each team. They do this by adjusting the line so that an equal number of bets will come on each side. They have no directional exposure and don't care which team wins. The options dealer is the same. He will both buy and sell puts and calls. So a long call is an options bet that price will go up, and a long put is an options bet that price will go down. If calls are bought or puts are sold, both of these are viewed as a bullish position in the market, and the VIX is going to move lower. If puts are bought or calls are sold, these are bearish bets, and the VIX is going to move higher. The higher the VIX, the higher the fear that the market will drop. The lower the VIX, the lower the fear that the market will drop. And this is a picture from Spot Gamma's Tuesday evening founder's note. They do a note in the morning and the evening, and it shows how volatility increases as price drops below 5,500, which it was going to do the very next day, which was yesterday. And the volatility trigger sat at 5,500, which is right here. And coincidentally, also zero gamma was sitting at 5505 yesterday also. So in effect, the volatility and zero gamma were both at 5,500. When volatility is basically going to decrease above 5,500 as dealers become long gamma as price trades above. When the gamma is negative, options dealers' hedging activity reinforces rather than dampens market moves. This is important in negative gamma. Dealers will have to sell futures on the way down and buy them on the way back up. Yesterday on Wednesday was a perfect example of what to expect. In a positive gamma market where we are now, dealers sell the rips and buy the dips, and we have less volatility. Yesterday, options dealers had to sell futures to hedge the puts sitting at 5,400, which we see down here at the put wall in the hour and 25 minutes that the ES sold off from the open. And that basically looked like this. The red and green circles are a proprietary ZoneTrader Pro tool that filters out large lot trades from the time and sales. This delta strength identifies large lot trades by rebuilding the time and sales tape. And this is really important. What you see as a tick is not the size of an order, it's the size of the fill. And these large lots are likely dealers hedging their 5,400 puts on the way down. When the market reverses, they will have to be the buyers. The ZoneTrader Pro divergence tool was also picking up distributions on these pullbacks, and there was a total of 6 of them on the way down before price actually reached the low. And the next thing that's important to understand is why the market reversed like it did yesterday at the 5,400 put wall. And let's look at one more chart before I go and answer that. This is from Monday, August 5th, which was the start of the sell-off, and again illustrates the concepts perfectly. The ZoneTrader Pro Delta Strength Indicator was picking up large lot trades starting on Sunday night as the sell-off progresses into Monday morning, there is a significant amount of short large lots being traded. And this is dealers hedging into the 5,200. And you see I've marked the 5,200 level on the chart, basically set up at the ES 5,220. The dealers that were, as the sell-off progresses, the dealers were coming in and hedging into 5,200. And when we get to 5,200, we see the first buy delta strengths coming in. And while this only looks like a small 4-inch, 5-inch move, that was actually 77 points higher in about 2 hours before reversing. And then when price reversed, the dealers were then needing to hedge 5,100. And when we got down to 5,100, again, we see the large amount of green delta strengths coming in. So what was happening at 5,200 first, and then at 5,200, and again yesterday at 5,400? Well, what is likely happening is a put is not generally considered a bet. It is generally considered an insurance on a portfolio. So if somebody was insuring a portfolio down to 5,200, what they did is they likely rolled those puts down into 5,100. And then when price got down to 5,100, they likely rolled those puts even further down into 5,000. It's basically fire insurance for your portfolio. When the ES price closed on the 5th, the close was 53.05, which was 185 points higher than the 8:30 a.m. low, and that was a pretty big move. Now, this is yesterday as a price approached 5,400, when those puts were likely closed and rolled lower to 5,300, taking the selling pressure off of from the hedging off the market. And then at the same time, there were positive comments from the NVIDIA CEO, which sparked the rally. But as you can see by the combo levels down here, we almost hit the combo level and the put wall to the tick. And then you can see the delta strength indicator right there on the very low, coming in with this 1,660 lot single trade. And that was basically, the low was basically called right there. The market rallied up until 5,500, which became short-term resistance, and that we see over here on the left side of the chart, until a series of large lot trades, likely from options, took the price higher and above the 0 gamma level. Now you understand why the options are important, and let me show you the ZoneTrader Pro tools to make those entries. This is how I begin my trade selection. I have 4 VIX symbols on the chart. They are the VIX 9D, which is the 9-day VIX, the normal VIX, a symbol called Core 90D, which is representative of puts being bought and sold, and the volatility of the VIX, which is VIVIX. If I'm looking for a long trade, the VIX should be falling and moving below the moving averages that you see on the chart, and the opposite for a short trade. You can see all 4 VIX symbols were above their moving averages, giving us short trades into the low. The red and the green stripes are from Shark Indicator's Bloodhound indicator, which is using the ZoneTrader Pro VIX trend template, which I created. This is a Bloodhound template that is showing the trends of 9 different symbols, and it's not meant to call either a high or a low. Here are those short trades with distribution divergence signals into the lows. The red and green stripes are from the Bloodhound indicator, which on this chart is picking up the $ tick symbol. And this is what I call, this template I call tick confirmation. We would want to see either a red or no color going into these short trades. The lows were put in at 1050 and ZoneTrader Pro begins to trade long accumulation divergences right after that. And that's pretty much that is the low that was being put in between 1048 and 1055. Now, what is important is the tick is now living above the zero line, which is why we have the green confirmations here. And I'm going to show you what that's going to look like. This is a chart I created using the ZoneTrader Pro tools, and it depicts the lows yesterday. Starting at 1051, which is right about here, the tick index begins to paint green, and this is what I just referred to as living above the zero line. Okay, so we come up to the top up here, and starting right about here, the tick is now living above zero, and I placed a black horizontal line there to kind of give you a good idea where zero is at. The second panel down here is a filtered cumulative delta looking at large lot trades. So this is again my tool, and it is looking at only filtered trades of 25 or more. We see this very large trade going off here, probably for over 2,000 contracts, which pops up the number, and that is again occurring on the lows. The third panel, it has the ES with a specially modified version of the divergence indicator. This indicator is picking up divergences that are going from highs to lows and lows to highs, which I have circled, and is also filtering for just large lots. So basically what is happening here is as we are getting the green tick confirm, we can use this special divergence indicator to trade with the tick, and we see that we get some pretty nice trades out of it. The last panel, which is the panel down here, is the Core 90D, and this is again one of my indicators that I use to pick it up. And we can see that, especially as we get into 1055 to 1058, where we have these real nice long signals, we see that the Core 90D had been falling. And again, that is reinforcing the theory, which I'm explaining right now. The puts are being rolled, they're being taken, and they're being rolled lower, and no longer do you have the hedging pressure that had been happening for the past hour and a half. Lastly, this is the VIX charts from the lows with the VIX prices below their moving averages, and the ZoneTrader Pro VIX Bloodhound template now telling you that the trends are now bullish, with our one little exception in this area from 1121 to 1127. We see that the price is broken out from the moving averages. We see these retracements that are only coming back to my minor resistance zones. It's exactly what we want to see. Trend continues, and we keep trading up. This takes me into the charts that I use to set up a trade. The chart on the left, this chart right here, is the tick index chart with the Bloodhound template used to evaluate the tick. And in this case, this is yesterday from 1230 to 1250. We can see that the tick is living above the zero line. So that's the first step I want to look for in a long trade. To the right is the ES chart showing 5 possible trade locations. that had divergences. I've marked one trade, which I'm marking right here in red, traded through the divergence signal. Now, one of the things that's very important, I realize there's a lot of stuff on this chart. I offer personal training so that if you do purchase the software, you understand everything that you're getting and you're doing. And the very first thing I would teach you is that what it's set up right here, as far as these patterns go, were a high risk trading pattern. So that's kind of interesting that of the 5 patterns here, the high risk one is the one that fails and goes lower. The VIX trends are also green for all these trades, and that's from the trend lower VIX template that we see up here. These are the last 2 charts. The chart on the left is a SPY chart, which is used as an ES proxy because it develops tradable divergences. And it has the tick confirmation template on it used to evaluate the $ tick. You see that up here. The chart on the left is the 4 VIX charts with the 4 symbols I follow. For me, this is the most important chart. For the first 3 possible long trades, the VIX, this one, and this one, the VIX was below the moving averages, which I would consider bullish. However, for the 4th and the 5th trades, the VIX had risen in the minutes prior to the 4th trade and was now trading above the moving averages and warning you of a problem. So now you have a combination of a pattern that is a higher risk, and you now have the VIX moving against your position right here. After the 5th trade makes its low, the VIX starts to fall, and we get green tick confirmation right here. So again, if what we want to see is we want to see these numbers coming back down, we want to see green over here, and that will lead us to our decision whether or not we're going to take the trade. To summarize, though, the most important chart to me is this VIX chart here on the right, because I want to see how the options are reacting to each price level where I have to make a trading decision. This is my tick chart from this morning, so it's kind of interesting. And it's the second, and my second most important chart. Again, it's showing me where the tick is living. So we see this, the tick was basically above 0, all the way from during the entire 10 o'clock hour. It's showing me the large lot trades down here in the cumulative, which is just going higher and higher. And then in the third panel, what I'm illustrating down here is while we are trading with the trend, we can see that our cumulative delta is higher. We were also developing 5 different special divergence long trades. Now, we also developed, we will also develop short trades, and you can think of a short trade that if you were long, that may be a reason why you'd want to get out. I don't necessarily think that one should be trading against the VIX trends and against the tick, but if you did have an opposing signal, we could also use that as a reason to exit our trade. But what was really interesting is at 10:34 on this chart, which is right about here, right in the middle, you see what looks like stop runs, first to the upside and then to the downside. And this was accomplished by puts, first being sold, pushing prices into the high right here, and then they are immediately bought back, uh, dropping price almost 20 points. This is a 20-point drop in about 2 minutes from the high to the low. At the low, the puts are sold again and the price rises. And we can tell that by our core 9. This is why I have the core 90D on this chart, where I can see and explain why I had such a big move, or why I had a move into this high and then immediately uh, starting a sell-off, and then immediately running the stops down here, and price goes on. Here's one more example of how this core 90D works. We see a likely stop run in the low, which is back here. Puts are being sold. That is what puts are sold to get it down to this low. That is this part of the uh, indicator right here. We see one large buy and the accompanying hedge from those puts right there. And then again, something really interesting, the Bloodhound, this is showing me the VIX trends. The VIX trends were negative at this point, and going into this high resistance zone right here, we could see that there was increasing put buying going into that. And, that can be something that could justify your trade. We, what's going to end up happening is the market's going to sell off 57 ticks. So something like 14 and a half, 14 and a quarter points. And you can really describe what's going on by looking at our VIX indicators. Why did we get such a big move? Well, because they were preparing for it. Want to quickly illustrate volume analysis, because it too is extremely important. On the left side of the chart is an indicator that is indicating the support and resistance. This indicator I call the KP2 ratio. So I put it in green where it is falling, and I put it in red where it is rising. Green is illustrating support, red is illustrating resistance. So we can see that from this point right here at about 11:52, resistance started to get put in to this high at the height of this strong trend. And then it was followed by a tick divergence exhaustion price pattern, which again, we saw resistance going into that. So again, using all the tools tells me that there was resistance up here. As price traded down, again, this is just really interesting. This is maybe only a 2 or 3 point pullback, but what they did is they again brought out some resistance to that, and price is going to end up trading down 6 or 7 more points from that resistance that was put in there. On the way down, we see that they were again supporting them. And in this example, I realize it's a little bit old because price is trading at 5,300, 5,375. But in this example, price actually based here for the next hour. So it basically formed a good a base off of this support when it went into the low. This is the tick confirmation template that is picking up the bullish trade that I just showed you. As we get into high, we see the short exhaustion trading pattern, and that is right here. We immediately lose tick confirmation setting up the short trade. At about 12:02, the tick is now, and this is right about here, the 12:02 tick is now living below zero. And that's just after a bunch of large lot options trades basically came in. And this is a trade that we could have planned in advance when price was reversing higher, because we know to expect exhaustion up here as a price pattern. So as I noted a little earlier, I offer personal one-on-one training at no charge. Additionally, if I update or upgrade any of the ZoneTrader Pro tools, I do not charge any fees. There's only the one lifetime license and no additional fees. There are no yearly maintenance fees either. So basically, I come to some conclusions, and, they're very easy to follow and very informative, that, options dealers, they need to hedge their trades. And they do that. When they do that, the VIX is going to move either bullish or bearish, and we can pick up those moves and following them. I'm going to teach you how to avoid high risk trading situations, like in the example before, by trading with the trend, by trading with the VIX, and trading with the tick. Divergences developed on the SPY chart, they also make excellent trading opportunities. I'm showing you the whole purpose of ZoneTrader Pro from the very beginning was to show me real-time information. And now that includes the tick analysis, the volume analysis, and the real-time divergences. And basically, I think I cover everything with my tools here so that we can trade effectively, including in the divergence tools. I have accumulation and distribution divergence in that toolkit. And with that same divergence tool, we also have, we can also perform volume analysis. Now, let me bring up the charts from today, and the charts from today were pretty interesting. Let me see first if I have any questions. So Valeria says, what do you mean by the tick stays above or below zero? So the zero line is this black line that I have right here. And the black line, I like to say it's either living above or living below the zero line. And just because, as we saw from the example from earlier today, just because the tick is above doesn't mean that the ES cannot drop, or vice versa. I've seen both happen. However, as a general rule, what I'm trying to do is I'm trying to develop my trades based on what the dollar sign tick is giving me here. And then such as this trade right here, I'm also looking to continue to trade with any trend. There was two really big sell-offs today. I showed you one. The other one was additionally quite interesting. So this is again about another 20-point sell-off. And as we were making this high right here, this is the whole reason behind this tick template. We can see that the tick confirmation is now giving us a red bloodhound. So if we were in a long trade, real good reason to be out of it. We can see that some large lot trades start to come in. There's at least four of them up here. Just because it says -1 right here too, that was at least a 25 lot or better. What's happening is the bars being broken up. But there were large lot trades all throughout in here. And then it accelerated into this low. And again, you can see how the core 90D is confirming that that was done with puts. So these trades right here were likely options dealers needing to hedge those puts. And then they immediately got bought back, and we started moving higher once again, and we're 20 points off the low in about 10 minutes, a little less than 10 minutes. Um, the $sign tick, it's not that no transactions are being recorded. The $sign tick is an index that is created by the New York Stock Exchange, and every symbol, so 2,500 companies, every symbol is either trading on an uptick or a downtick. So every symbol either has a -1 or a 1 associated with it. So if somebody comes in and they start selling Microsoft hard, it's only going to reflect a -1 from Microsoft. But if this was a large program trade where there was a basket of equities, that's basically what you're seeing to create. This is a very, very low number down here where we got to about a -1100. Don't usually see numbers this low. But what is happening is just the market is selling off. People are seeing this, they're reacting to it. Um, there again, to me, this was all engineered by an options trader that sold or that bought a lot of puts to get us down here and then bought them all back. And again, this is what the delta strength is showing us. We have this really one large lot there for 1,296. So that's basically what happened there. The other chart that, like I said, I think is really important and is just looking at our VIX chart. We go ahead and we expect a normal pullback, and that's fine. And where I get worried is if we have the pullback like we had right here, and it continues to go through and it breaks the moving averages. And that is when we now want to shift our focus from being long, as we were back here, to looking for a short setup. So where we want to go back long is right in around here, where we see that we have this big pullback, and we're now trading through the moving averages and into the support zone. So all of that, go and show that what happened at the end of the day. So there is that that spike, all related to options, and then in 10 minutes, the VIX is back to where it was when it started. But the VIX itself moved 0.48 from this low right here to this high right here, and then dropped that same amount in 10 minutes. So that was actually a pretty big move. I'm looking at the chat and I don't see any more questions. The Matt asked if the tools will be effective during the overnight session, and basically the answer is no. The overnight session, the VIX opens at 3 a.m. Eastern. So you do have the VIX, but you don't have any of the other tools that are going to help you with the trade. You don't have the Core 90D. You don't have the VIX 90. You don't have the volatility of the VIX. You may have the volatility of the VIX, but I'm not sure. But you also, the NYSE is not open, so you don't have the $ tick and everything that goes with that. The only thing you have in the middle of the night is volume analysis, and then after 3 a.m., there are some options being traded, but it's not a ton of options. So for me personally, I would want to stick with where I have the most advantage, kind of like playing blackjack. You want to play, you want to bet big when the cards are in your favor. Well, trading is, to me, is exactly the same way. And by using all the tools that we're being given, we can use all of our advantages. And it's kind of like um, you wouldn't want to go into you wouldn't want to trade without every possible tool that you have. And I think the Core 90D is the best tool that I have, and that's basically why the Core 90D is on this chart to show me what's going on down here. It's just a very interesting symbol that we have. This is a chart that I use to display the levels. You can see where we, again, we have options likely driving into this low right here at 950 and then reversing and coming back out. And up here is that drop that we saw into 3 o'clock. So this has a bigger zigzag on it. And that's another question I get asked a lot. I don't use any time. Time is irrelevant. Only the zigzags are. So what we need is we need a bar to close in order for Bloodhound and all the indexes to update. So we wouldn't want to be waiting on a 2, 3, 5 minute chart to get new information. Gene asks if you have to pay a separate fee for the VIX. Yes, you do. Basically, NinjaTrader has Kinetic, and you get all your data from Kinetic. So in order to do all of this trick stuff that I'm doing, Kinetic itself is $75 a month. And then it's about $19 for the indexes. We need the NYSE index because the SPY chart is very important in this. So we develop divergences off of the SPY. So we need the NYSE, and that costs like $7. And then for all of the indexes that go to make up the Bloodhound signal, that's another $7. And then we get the level 1 data for the ES to populate the charts. So yes, there is you're going to need some kind of data, whether it comes from Kinetic or CQG or whoever else puts out data. I don't know. I just use the Kinetic data and I don't worry about it. Any other questions that anybody would have? Let me bring you back to the website then. On the website under support, you can always contact me. There's through my little form right here, or you can call me, or you can find me on Skype. If you want to, Skype is pretty much the easiest way. It's kind of like WhatsApp. You can get me on Skype. All you have to do is search Zone Trader Pro, all one word. Um, Basically, I do offer a $200 discount on the software. And I do that if we do it the easy way. And the easy way is that I go to your computer, set this up for you digitally, and we do not use PayPal, so there's no PayPal fees involved. So that really is the saves you money, saves everybody time and heartache. So anybody else have any questions that I can get to? Chris, I don't see anything coming through unless I am missing something.
All right. Thanks again, Chris, for taking the time to share with us today. If you enjoyed today's session, we hope you'll join us for future webinars. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. We would like to remind you that the information provided in this was that of Zone Trader Pro and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day. We hope to see you future webinars. Happy trading from all of us at NinjaTrader Ecosystem.